Hey guys, hope you and the families are doing well. In this video, I'm going to teach you about one of my favorite trading setups that I call the gap down reversal bar setup. Specifically, we're going to be going through my trade in GEV that I was targeting heading into the 3rd of July 2024 session. At the time of filming this video, I still have a long position in the stock. I'm going to teach you about the candlestick pattern recognition, the data behind the candlestick patterns, and also how I use the key moving averages as a reference point for where I'm looking for these gap down reversal bar setups. MarketSurge are today's video sponsor. They are my go-to resource for analyzing company fundamentals. They are currently running a special limited time offer. If you are interested in that, then you will find a link in the description and the comment section below. Okay guys, we're going to split this video into 3 main parts. Part number 1 is going to be the candlestick pattern recognition side of things. Part number 2, I'm going to load up 6 different stock charts spanning many decades with lots of gap down reversal bar setups so you can start dialing in your pattern recognition. Then third and finally is I'm going to load up a chart of GEV and take you through the thought process of why I was targeting a gap down reversal bar setup of its 50-day simple period moving average, which specifically was a belt hold bullish setup. So let's start off with part number 1. So these are variations of gap down reversal bar setup. So it is the piercing pattern, the belt hold bullish, the meeting lines bullish, the thrusting pattern, and the bullish engulfing candlestick. Below them, you can see the data from Thomas Bosorsky's Encyclopedia of Candlestick Charts. But now my favorite of these 5 is called the belt hold bullish, which you're going to see on GEV. So I love looking for the belt hold bullish, especially when it forms around a key moving average, 21-day EMA and 50-day simple period moving average in particular. You can see the bull market and bear market reversal rate of 71% from about 14,500 database inputs. Now, when we go on to GEV later, I'm going to talk about the importance that the stock gaps down and opens on the lower of the bar and pushes up to indicate that there is an immediate presence of demand. But as we start looking at gap down reversal bars in part number 2, you'll see variations of these: the piercing pattern, the belt hold bullish, the meeting lines bullish, the thrusting pattern, and the bullish engulfing candlestick. But as you're going to realize, it's the context for where are you seeing these type of candlestick patterns form. So let's get into part number 2. Okay guys, part number 2 of this video, we've got 6 different charts loaded up, one of which we're going to very thoroughly study in part number 3, which is GEV that put in a gap down reverse bar of its 50-day simple period moving average. So I'll take you through my thought process in part number 3 for that one. But we've got a couple of other charts loaded up, right? So something that I like to see with these gap down reversal bars is I visually want to see a lot of buying. And if the buying is immediate, then that is an encouraging sign. It's a constructive sign, I think. So what do I mean by that? Well, let's take a look at a chart of SMV in 2001. So see how it's pulling back down here. So I'm using these key moving averages as reference points. Most notable is going to be the 21-day EMA, which is going to be the blue line, and then the 50-day simple period moving average, which is the purple line on my charts. I don't really do it off the 10-day EMA, these gap down reverse bar setups. 21-day EMA, 50-day simple period moving average are more so the sweet spots where I am looking for them. So you see here, SMV is pulling back down. So what I want to see as I'm using this 50-day as it's pulling back down as a reference point, I want to see large operators stepping up and supporting the stock. So you can see it's a belt hold bullish pattern. It gaps down, but note how the open is on the low of the bar. So you see here how the close is up here. Okay, the close is up here, it gaps down, opens on the low of the bar, and then immediately pushes up. So with a gap down reversal bar, such as a belt hold bullish, if it gaps down and the opening price is the low of the day or very close to the low of the day, and then it pushes up and there's a strong reversal, what does that tell you about the presence of demand? There was a lot, and it was immediate. As soon as the market opened, buy orders were flooding the market for this stock and pushing the price back up. They were able to take out the sell orders. So I think that's a really encouraging sign when I'm looking for these gap down reversal bars. So you can see CAMT in 2023. Okay, you get a failed one here if you're targeting it through the high. Not every single gap down reverse bar is going to work. Not every single trading setup is going to work, which is why risk management is really important. But you see here, you get this bullish engulfing candlestick, but note how it's around the 21-day EMA. The stock is a leader at the time. Really positive move up here, so it's pulling in to the 21-day EMA. That's where I'm then looking for these gap down reverse bar setups. Note how it gaps down, prior close here, gaps down, opens on the low, pushes up, reverses. Really like that. CINF back in the 1990s, 1992, gap down reverse bar if it's 50-day, perfectly. Bullish engulfing candlestick around its 21-day EMA, and then the stock makes a nice run here, pulls back in, 2 gap down reverse bar setups here that open on the low of the bar and push up really good. You look at Skyline Champion 2021, okay, so it's pulling back in here also towards a prior area of support, which is then a confluence of the 50-day as well. So the prior closes here, it gaps down, opens here, little shakeout demand tail, pushes up and reverses. Really like that. AMD. So a gap down reverse bar can be really effective as well, because on the open it looks terrible, especially if AMD having a big gap down as it did in 2019. So the prior close here, gaps down, opens here. So imagine if you're long this stock and you've been long this stock up here, maybe you have your stop loss in here, maybe you have it around the 21-day EMA. As this stock is gapping down on the open, you're going to think this looks horrendous, this is going to turn around, be a change of character, I'm getting out of this thing, only to see the stock gap down and reverse and knock weak hands out of their position. So when I see it on these type of stocks, the AMDs, the Nvidias, as the punch the microphone, the AMDs, the Nvidias of the world, okay, I really like it around 21-day EMAs, 50-day simple period moving averages, certainly if the stock has displayed a lot of relative strength, because I just think it's the large operators up to their usual games shaking out weak hands. So see how it gaps down here, would have knocked out a load of stop losses, scared out a load of weak hands, only to reverse. Really encouraging signs. So now we'll go into part 3 and I'll take you through more of the specifics for how I target these setups. Okay guys, part number 3, we've got the chart of GEV itself load up. So in a couple of minutes time, we're going to be going through this gap down reverse bar setup that I targeted off of its 50-day simple period moving average. But before that, we've got to tell the story of how do we get to the gap down reversal bar setup. Now this is why I love the work of Richard Wyckoff and the concept of the composite operator, which is basically going from a mindset of every single movement in a stock's price is controlled by a single entity. Now what is that single entity trying to do with the stock? Now it's not, there is no single entity controlling GEV, but I think it's a useful framework, a useful mindset to be operating from, to go, okay, what are large operators doing with this stock? Are we seeing visual signs that we would associate with accumulation, absorption of supply? Or are we seeing visual signs that we would associate with large operators distributing positions? So that's very important. We tell the story from left to right. And then as we get over here to the gap down reverse bar setup, then I'm going, okay, I think I'm seeing a lot of visual evidence, a lot of mental representations that I would associate with large operators are accumulating a position, absorbing supply. And then this 50-day simple period moving average is a region where I'm looking for them to step up and support the stock. Did they step up? Yes, they did with that gap down reversal bar. So let's run through the story here. So if you look at the first day, a very good day for the stock's IPO. Note how it opens on the low and pushes up. So this is a similar concept to what we're going to be going through on the gap down reversal bar, that the opening price was basically the low of the day off the 50. What does it say? What does it indicate? There's an immediate presence of demand. There's an immediate buying as soon as the market opens. So on the IPO, see how the open is the low and it just goes. Buy orders are flooding the market in such an extent they can just take out all the sell orders as soon as the stock opens. Very encouraging. Now some of you may be familiar with this chart pattern that forms over here. 1 contraction, 2 contraction, 3 contraction, but a VCP, but a flag type S, right? The volume drying up as well. We start to get 52-week highs on my relative strength line. Okay, interesting. What's marking the low? Well, you get kind of, it's not a gap down reverse bar because of the IPO, but note how here it just opens on the low, pushes up. Then you get a shakeout demand tail marking the low. You get a shakeout demand tail off the 10-day EMA marking the low there as well. Very constructive price action. And then the stock starts basing. Okay, so it starts basing in this now blue zone. Okay, so it starts basing. So what I'm doing is I'm looking for visual evidence, the things that I would associate, the mental representations with there is accumulation, there is absorption of supply. So prior to this base forming, this is very constructive price action in here. This is a very constructive rally. Note the 52-week highs as well. So what I'm doing is you can see these numerous green bars, these widespread bars coming through. So I'm looking at this here thinking, okay, visually there looks like there's a lot of buying coming through on some of these bars here. And I'm also looking around the lows. Gap down reversal bar, gap down reversal bar, shakeout demand tail forming the low here. Okay, the stock tries to rally. There's a supply shoot coming through up here. So it tries to rally, gets turned back around. It tries to rally again. Okay, it turns back around. But as the stock pulls back down here, note that the volume is generally quite low. The little pop in the volume, that's actually called witching day as well, the 28th there. And you also get this shakeout demand tail. But as it pulls into the 50, generally speaking, the volume is drying up. And then you get this gap down reversal bar into a prior area of support as well. So we have a prior area of support where the stock has found supportive action. You have the 50-day moving average there, and how it pulls in is constructive. And for me, I'm not going to go too much in depth here. You see a lot of constructive signs that I would associate with accumulation, absorption of supply. So as we dial it in and look specifically at this gap down reversal bar, okay, what I like to do is target it through the high, stop underneath the low invariably. Now I use the stock's 20-day average daily range percentage. So if I go on the indicators here, I use this one here, okay, this ADR percentage one, okay. So what I'm doing is I like the gap down reversal bar to ideally be less than the 20-day ADR percentage, just so I can help keep the risk in check. And ideally, it's less than 4%, 5%. If I start going over 5% initial stop loss swing trading off the daily chart, for me, it's getting wide. I like them to be 4%, 3%, maybe even 2% if it's very, very tight. But I'm looking at the initial risk relative to the 20-day ADR percentage. If it's around it, less than it, ideal. Sometimes I'll stretch to 1.5% of the 20-day ADR percentage. Depends how much I like the setup. So it's pulling back down, okay? And note the shakeout demand tail marking the low of the prior session and how it holds the 50-day moving average. Now we get a gap down reversal bar. So the prior closes here, it gaps down, opens on basically the low of the day and pushes up. So this is then telling me there is immediate presence of demand. There are buy orders immediately coming to the market in such an extent they can take out all of the sell orders, and then it's the context of the 50-day simple period moving average that this is forming. So I'm then targeting it through the high, stop underneath the low. I will then invariably do a bit of active risk mitigation in my own trading, pushing up initial stop losses through long in trade. Won't talk about in the video. If you want to see that kind of analysis, then you'll see the weekday video on my platform if you are a member of that. But what I want to do is go down to the 1 hour chart. So as we go down to the 1 hour chart, this is where we can get into some of the nuances utilizing multiple time frame analysis. So this is all happening in the context of the 50-day simple period moving average on the daily chart, which is going to be the higher time frame relative to the 1 hour chart. So note here, this is the gap down reversal bar session. Okay, this hit, let me just kind of make it in blue. So what I really like to see with these gap down reverse bar sessions is visual evidence that there is a lot of buying coming through, and the buying is immediate. Because for me, the large operators, they're going to be most active in the first 1 hour of the session. So the prior closes here, gaps down to the 50-day, and look how it reverses immediately. See that? Just gaps down, open is the lower bar. So the prior close here, gaps down, opens here, reverses immediately. I really like to see that. Really like to see that. A couple of shakeout demand tails, and generally speaking, the stock trades pretty tight after that in a little Davis box on the 1 hour chart. So I'm then targeting it through the high, stop underneath the low. But the key is this bar here. Okay, this bar here. Gap down, open on the 50-day simple period moving average pretty much, and it just reverses off of that. Buy orders are coming through immediately. I want there to be buying. I want there to be buying. I want other traders, other market operators to see what I see, and they are willing to step up and support the stock there. So the gap down reverse bar is about being able to visually see that buying in a region on the chart where I want to see the buy. Stock could be basing VCP, flag, wedge, pennant, Davis box, cup and handle. The moving averages are there in terms of 21-day MA, 50-day simple period moving average. This is where I'm looking for them, but also telling myself the story of how did the stock get there? Like, how did it get to this gap down reverse bar? The mental representations, peaked by Anders Ericsson, fantastic, but am I seeing signs that I would associate with accumulation? These widespread candlesticks, shakeout demand tails, gap down reverse bars, marking the low, constructive basing pattern, relative strength, 52-week highs, all of those things. So I hope that video there has been constructive for you in terms of learning about one of the setups that I target, which is the gap down reverse bar. I think last week I took you through the trigger bar in the app trade, and then the week before that in KGC I took you through the shakeout demand tail. So they are really the three kind of variations of chart patterns, candlestick patterns in the right context that I target: shakeout demand tails, trigger bars, and gap down reverse bars. So thank you very much for watching. Thank you for the support on the channel. I look forward as always to seeing you in a future video.